So the number one reason my clients are not buying a house right now is because they cannot get a 5% mortgage rate. Today, we are going to show you how to do that. If this is your first time watching my videos, welcome to the channel. My name is Iain Phillips. I am a local realtor here in Orange County. I get calls and emails every single day from people like yourself wanting to know which city makes sense for them to move to. So whether you're making a move in 10 days or 100 days, give me a call, shoot me a text, or send me an email, and I'd love to help you make that move to Orange County. My name's Iain Phillips. I'm a realtor here in Orange County, and I'm here with Larry Bammer. He is the preferred lender I use for all of my clients.
Hi, Larry Bammer, eMortgage Capital, and I'm excited to explain to you the 3, 2, 1 buy down. I get a lot of purchase contracts where the person's already in escrow and their realtor, not as knowledgeable maybe as you are that this exists. And when I'm talking to them, they're already in escrow. I say, perfect, are you getting a seller credit to buy down the rate? And they, no, how can I do that? It's too late, right?
Yeah, that's one of the problems we're having is a lot of people just are not aware that you can ask the seller to give you cash toward buying down your rate at close of escrow.
Yeah.
So what I've been doing for my last few deals is rather than paying $20,000, $30,000, $40,000 below list price, you pay the list price or maybe slightly lower, and you get a huge credit to buy down your mortgage rate, which is reducing your rate by 3% in your first year, 2% in your second year, and just saving you so much more money in the long run.
Yeah, so there's a big difference in prepaid buy down versus temporary. We're talking temporary buy down. Prepaid buy down, I generally discourage it unless it's essential to qualify you to even purchase in the first place. Because let's say, I mean, the reality is people that are buying right now, we're in 2023. If you're buying right now, are you going to keep that mortgage for 30 years?
Absolutely not. You're probably going to refinance by 2025 or sooner than that.
Right. So the reality is, we want something temporary, not permanent. If you're going to spend, you as a buyer are going to spend $30,000 to buy down the rate to some degree, and not even down to the fives we're talking about. If you refinance in 2 years, that money that you paid, you as the buyer paid for it, it's gone.
Yep.
We're talking temporary buy down. It's an escrow account similar to what you do for maybe escrow for your property taxes or escrow for your home insurance. So give me a scenario. Let's say what's the average sale price right now for Orange County?
It's roughly 1.3 million.
Okay, so give them a scenario, 1.3 million, good, let's see, 720 FICO score, 20% down. How does this work? You as the realtor, how are you crafting this? What are you asking for? What does it look like?
So in the offer, a lot of clients initially say, well, if it's listed for 1.3, the market has slowed down. We're more of a neutral market right now. Homes are not flying off the shelf in the first weekend. Days on market has gone up pretty significantly, at least where I'm working. So a lot of clients will say, instead of offering list price, can we offer, $1,250,000 or something like that? But what I'm recommending, and I always have them cross-check it with you just to to really understand it in detail, is pay the list price and then ask for a $50,000 credit in order to buy down that mortgage rate for the first couple years or the first 3 years in this case.
So what you're asking for, I did the math for you as I always do. You're asking for a seller credit for $49,872, and that will get you the buyer for $1.3 million purchase price and a loan of $1,040,000. That will get you the 3-2-1 buy down. So you're saving a little over $2,000 per month. Now we have to qualify you for that, like an ARM you would. I have to qualify you for that 8%, mortgage. Because in year 4, that's what it would look like if you never refinanced. But your payment, the effective payment you're making every month is going to be like a 5% interest rate. So you're saving $2,048 that first year every month. Year 2, it's 6%, and you're saving almost $1,400, $1,395. Now, you mentioned in 2025 you're refinancing. So let's say they buy next month and they're in this till this first year mortgage till November of 2024.
Yeah.
So starting December, going into 2025, where do you think the rates could be?
Well, the expectation is that rates are going to start getting cut by summer of next year, by 2024. And I think the survey was done by end of 2025. Rates are expected to be low 5s, high 4s.
So at that point, so first year you've benefited at the seller's expense to have a 5% mortgage. Year 2, it's up to 6. Now, for some reason, all of a sudden, the rate gets to below 6%, we refinance you. Now, you're probably asking, well, what about that? Where did that $49,800 go? It went into an escrow account. So let's say that first year we spend, 2 times 12, $25,000. You have another almost $25,000, 24 left in that escrow account. So let's say year 2, you're like, you know what? I want to refinance into 5.99 fixed for 30 years. Well, that $24,000 was not prepaid, that disappeared. That goes, when you refinance, that money goes out of your escrow account and into your loan balance. So your $1,040,000 loan balance is now $1,015,000. So it's fantastic. Your seller benefited you 100%. That's why I almost never push this prepaid, but the temporary buy down at the seller's expense is the way to go.
Right. So that remaining balance, so say you want to refinance after year 2. So you have first year, you have the 5%, second year, you have the 6%. End of year 2 comes around, you want to refinance because rates are, 5.5% or whatever they are. Whatever you have in that escrow account will go toward paying down your loan amount?
Yeah.
Wow.
Yeah. And what I'll say to wrap up is, I remember, how many times did you text me or call me for that one client we're thinking about recently where you wanted to know how much on this particular property, what kind of credit I need?
Yeah, and probably multiple times a day.
Yeah, so because it's not just $49,000, it depends on the day, it depends on the rate, depends on the purchase price and the down payment, because his down payment changed a little bit. So again, it was easy. Text me hey, here's the down payment. This is the new property we're looking at. And I can do the actual math, because you don't want to ask for $40,000 seller credit and then find out you can't do it. Now you have to do a 2-1 buy down. The reality, I'll end with this too. We're talking about a 3-2-1 buy down, because having a rate in the 5 sounds pretty sexy right now. But they have other options. There's a 1-0 buy down. Let's say the seller doesn't want to give you $50,000 credit. You're in multiple offers, whatever. There's a 2-1 buy down. There's a 1-1, so it's 1% lower for 2 years. There's a 1-0 buy down. So there's a lot of options, but the 3-2-1 with the rates how they are right now is the way to go. I appreciate you wanting to share this with your clients, because it's invaluable right now.
It's huge. And the reason I wanted to make this video is because a lot of people think the market is still hot, but a $49,000 credit on a $1.3 million purchase price is absolutely happening right now. This is very reasonable to ask for in a purchase agreement, and this is how we're making homeownership more affordable.
Awesome. Thanks for having me.
Yeah, thanks for being on the video. So if this sounds like something you're interested in, reach out to either of us. We'd love to get on a phone, chat with you, see if this option works for you. Thanks for watching. I'll see you in my next video.